I'm Charlotte McLeod with the Investing News Network, and here today with me is Justin Huhn, founder and publisher of the Uranium Insider Pro newsletter. Thank you so much for being here online with me once again.
My pleasure to be back. Yeah, nice to see you. Thanks.
Nice to see you as well. It's been a little while since we had the chance to speak last. I think it was toward the end of April, and so much has happened in the uranium space since then. We have a lot to cover. I think where we can start today is with kind of the biggest piece of the puzzle in the market right now with this, which is the Sprott Physical Uranium Trust. I know when it was announced, there was a lot of expectations about what it could mean for the market. So to start off, maybe an easy question. What were your expectations? And now that we've seen it in here and operating for a few months, did it pan out as you've expected so far?
I would say no, it hasn't. It's panned out far more aggressively and rapidly than anybody expected, Sprott included. If we spoke back in April, gosh, that time really flew because it seems like it was only a couple months ago. But the announcement that Sprott was going to take over Uranium Participation Corporation happened in April. So I don't know if the last time we spoke was after it happened. It probably was. No, I don't
It was
remember.
just after,
Yeah. Okay. So after that announcement, the market ran pretty hard for about 2 months, and it kind of peaked out. There was a little bit of FUD, I guess, fear, uncertainty, and doubt that came into the market with a story about a potential leak at a plant in China, which turned out to be, nothing really of consequence. But it was a good excuse for retail to take some profits and things to kind of rest for a minute. So the stocks sort of precipitated in a decline from that point, the high point in June, bottomed out in mid-July, made a kind of a higher low in mid-August, and that was right about when so the Sprott deal was sealed. The shareholders voted for it to go through. That, I believe, was in July, and they immediately filed for a at the market offering, which is an ATM. It's essentially allows them to issue shares into the open market whenever they're trading at a 1% or greater premium to their net asset value. And so the initial ATM was 300 million, and they came out just guns a-blazing. August 17th was when the ATM went live, when they were first allowed to issue shares via the ATM. And they immediately started buying uranium. The spot price started to move. I think at that point it was about $32 a pound. The stocks took a couple of days of lag time to react to that, but as soon as the equities sort of caught up with the fact that, oh, Sprott is raising millions, if not tens of millions per day, and the volumes were huge going into the spot vehicle. And so since that August 17th, they've raised issued shares into the market to raise more than $420 million. So that's about 5 weeks. And they've purchased 10.3 million pounds of uranium. Now, the spot price reacted huge. It basically rose over 50%, about 55%, and went from $32 to $52 a pound in 4 weeks. And on that just about 10 million pounds at the time for that 4-week period. So the equities obviously went on a tear, but in my opinion, they didn't keep up with the spot price move. And that's probably because it happened so fast. So really what's happening now, in my opinion, is the market, not only the nuclear fuel market, utilities and fuel buyers and traders, but the investing community as well, all trying to kind of figure out what the heck's going on here, what happens next, and how are the markets going to react to it. So the space is taking a bit of a rest in the equities as well as the spot price. The spot price is ticking down actually pretty aggressively today. It was down about 10% today, but it's on very low volume. And typically when volumes are low in the spot market and the price is ticking down, it's usually towards the end of the month, which it is. And it usually has to do with traders manipulating the price down because their forward month pricing is based on the month close. So there's a trader out of Japan called Itochu, and a lot of times it's kind of a classic that they'll do some minor market manipulation to try to get the spot price to fall towards the end of the month, because then they can seal the deal for their forward month offtake that they get pounds from Uzbekistan based on the previous month's close. So that's what we think is happening here. But yeah, so Sprott, they've been trading at a discount to NAV for a couple of days now. And today, with spot price falling so fast, and actually was pretty big volume coming into the spot vehicle. So they're now out at a premium to NAV. So we think that if they didn't issue any shares today to raise some money, they probably will tomorrow. We'll find out in a couple of hours here because they report on a daily basis their share issuance and their pounds and their AUM, and they update everything. It's fantastic on their website.
Okay, so we have a lot to unpack there. And first of all, just for context for anybody who's watching, it's currently September 24th. It's a Friday. We'll probably be publishing this interview next week. So just so we know what day it is today. So there's been this huge reaction since the Sprott Trust started operating. Maybe one thing you can do to help us get some understanding of what's going on here is to explain why that's happening, because it was created out of uranium participation, which had kind of a similar goal of giving access to the physical uranium price, but this is obviously having a much bigger impact. So why is that, if you can explain?
Sure. So Uranium Participation Corporation was founded in 2005, and it was set up as not as a trust, but as a fund. And so they never filed to have an ATM vehicle. And the way that they would work is when they were trading at a significant premium to NAV and for a long enough period of time, they would issue shares into the market and raise money. They would issue shares by doing a bought deal or a placement, not via an ATM, to raise money to buy physical uranium. They did that dozens of times throughout their history, amassing a total of 18 million pounds of uranium, a little bit of UF6 as well, but 18 million pounds of U3O8 equivalent up until this year. In the way that the Sprott vehicle set up was they created it as a trust rather than a fund, similar to their physical gold, silver, platinum, palladium trust. So Sprott has 13-14 billion under assets under management in those trusts. And I guess they just recognized another market where they could set up a similar trust, and a market that had much tighter liquidity in terms of physical pounds available, and probably a market where they could establish very slowly over a period of time equities positions for themselves, for their clientele, and eventually, hopefully, make this thing go through, which it did. They were working on it for 3 years, getting this deal through. And so that's the big difference is the management of the trust is far more aggressive and goal oriented, let's say. Two is that they have an ATM. So anytime there's volume coming into that trust via buying the stock, they can issue shares as long as they're greater than a 1% premium to NAV. Now, their goal is to not be more than 50 to 60% of the trading volume on any given day. But when you have huge trading volumes like we did about 2 weeks ago, one day they raised 50 something million dollars in a single day. They purchased 1.4, almost 1.5 million pounds in a single day a couple of weeks back. So, and the other difference is that just the timing in the market, the time that this is happening is really at the tail end of what was many, many, many years of utilities and carry traders accumulating this above ground liquid inventory of uranium that was a result of overproduction from the previous decade after Fukushima. And so it took a really long time to work through that standing inventory. And we're basically at the tail end of that period, right when this new vehicle comes along. And so it's kind of a coalescing of a bunch of factors, and Sprott's just a powerhouse. I mean, everybody in the resource space knows who Sprott is. So just the fact that Sprott arrived on the uranium scene brought incredible attention to uranium. They have a huge list of massive funds that are, participating in ownership of their other vehicles. And it's just a matter of liquidity and marketing for this thing to really go huge and go mainstream. So it's a unique period of time in which they're just new to the scene. They really shook things up. I mean, nobody expected a 50% move in the uranium price based on 10 million pounds being purchased. Nobody saw that coming. So, but we're seeing very bullish. Canaccord Genuity just came out with a report a couple of days ago, saying they expect potentially up to $85 a pound uranium by the end of the year. So there's really bullish price forecast being thrown out there, and I think that we see a pretty fast moving market, probably in the next 18, 24 months is kind of my guess.
Okay, definitely we're going to return to price at some point during this conversation. For now, I also want to ask another question about that Sprott Trust. So based on the buying that we've been seeing, can we look forward and make any assumptions about what buying we may see in the future? Like, this is obviously a lot happening right now. What can we know about what's coming?
Unfortunately, not that much. And even Sprott, if you were asking John Ciampaglia, the CEO of Sprott, the same question, he would probably tell you the same answer. It's very difficult to know what might come into the market in terms of availability of pounds, because it would have to be in the form of inventory. If there's inventories being held out there that perhaps the owner of that inventory paid a much higher price, is not willing to sell them at a loss, but we get to that higher price and they want to unload it off their books, maybe some pounds will come into the market. Excuse me. What we do know is that there's 1.5 to 2 million pounds of primary production that's sold into the spot market on a monthly basis. So to the extent that Sprott can maintain, and really it's not up to Sprott, it's up to the investing in the flow of funds that comes into that vehicle. They've just created the vehicle. To some extent, it's up to them because, like I mentioned, they have a huge list of clients, and they can, market this product, and they can pull back on the marketing or press hard on the marketing. And obviously, if they end up getting a New York Stock Exchange listing, which would be a Q2, maybe Q3 story of next year, that really changes the game in terms of liquidity and availability of that trust to some of the much larger funds out there that can't take a position in a smaller trust. But if you consider the amount of monthly pounds being produced that are actually sold into the spot market, so let's say 1.5 to 2 million pounds a month, and they just purchased 10 million pounds in 1 month, it's probably safe to assume that they could very likely be consuming all of the available spot market pounds that are coming from primary production, and essentially offsetting, at the very least, the amount of pounds that are sold in the market from secondary supply, which is 20 to 25 million pounds a year. So it's a monstrous development to have a potentially consistent buyer in the spot market that is not concerned about the price they're paying. So they're not trying to buy as low as possible because they have no intent in reselling those pounds. There's no redemption mechanism in this trust as there is with their gold and silver trust. If you are a large enough shareholder of SLV, or Sprott's gold or physical gold or silver or platinum palladium trusts, and you want to cash out, you can actually have a redemption of the physical metal delivered. They're obviously not doing that with uranium. Nobody's going to store a few cans of uranium in their garage. So because there's no redemption, and the goal is to basically buy and hold these pounds, they can practically be considered an end user of the pounds, right? Because they do not intend to sell the pounds back in the market. They're not trading. They're not trying to buy low and sell high. They are buying based on the premium to NAV that they're trading at. So if they're trading at a 5% premium to NAV, technically they can afford to buy X amount of pounds based on their cash at that same premium to the current spot price. So it's just a huge development. It's very difficult to predict, but to say very vaguely higher is where things are going. But how high, how quickly, that's up to the flow of funds into that vehicle. And then obviously the flow of funds into the space in general, into the ETFs and into the equities, because ideally those are moving, at least similarly.
Okay, that's very clear. I was hoping you would bring up the fact that they don't sell it back. I think that will be really helpful for people trying to understand what's going on. So obviously now we have the Sprott Trust in the market. That's very exciting. We also have utilities still there that need to buy at some point. And I think we talked last time about how difficult it is to know what's going on with them. And I wondered if you could try to give us an idea of what they might be thinking right now. Like if you're a utility, are you concerned to see the price rising? Do you want to start doing deals now? How could that be looking?
I think that utilities are definitely finally starting to kind of wake up to the situation. It took a little while. I mean, the investing community, there's a number of activists, let's say, that are involved in the investing community that have reached out to utilities, have reached out to the primary producers to encourage them to push the utilities, that there's a looming supply deficit if you don't voluntarily come to the table and pay the prices that these producers need. We're going to have a serious crunch. We're not at that crunch yet. We are at a crunch in terms of availability of pounds in the spot market, but utilities are not, generally speaking, yet at a dire situation directly in front of them. However, there's plenty of utilities that do need to purchase more sooner, let's say. And those utilities clearly are concerned with the spot price, because when the spot price moves, the term price moves. And traditionally, it's very common for term contracts to be partially referenced to the spot price at the time of delivery. And so there's still plenty of utilities that are currently receiving deliveries on previously signed contracts, and those deliveries are partially referenced to the spot price. Often, not always, but often. That is one way that contracts are constructed, is to be, let's say, 50-60% reference to the spot price at the time of delivery. So if you're a utility and you took a delivery of uranium 2 weeks ago, and your term price on that contract was $35 to $40 that was signed 5 years ago, and the spot price 60% reference, you're paying $52 a pound, that really hurts. That hurts the bottom line. And I think that I know that the uranium consultants are finally actually speaking more directly and with stronger language about the rise in secondary demand that's driven by the financials and its likelihood to persist, and the unlikelihood of uranium to go back down to levels that the utilities have enjoyed for many years. So the inventories that are held by the utilities on average are not at dire levels. They're okay. They're not historically high. Historically, they're a little bit on the low side. The U.S. utilities are at around 2 years, which is historically about the time that they start to build those inventories back up, which is something that a basic supply and demand forecast doesn't really take into account, is restocking inventories or building up inventories. So in times of perceived shortage, if you perceive that there's going to be a food shortage, you typically go out and you buy more from the grocery store to load up the pantry. It's very similar. If there's a perceived shortage, even 5+ years out, which there is for uranium, oftentimes you'll make sure to bolster your inventories, knowing if you know that you will be, still up and running during that time as a nuclear utility. So the underlying fundamentals of utilities coming back into the market and at least consistently continuing to buy, even in shorter or midterm contracts, is very bullish. Hasn't really changed. And on top of that, now we have this whole other catalyst with the financials squeezing the spot market, essentially. So it's all connected. There's going to be a number of nuclear fuel conferences in the autumn, as there are every year, which is often why we see seasonality, positive seasonality for uranium from October to about January, February, because a lot of the utilities come back to the table after spending many months kind of not really paying attention to the markets in the summertime. And then they have the US utilities have new budgets on October 1st from the fiscal year. So we think that there's going to be some very interesting discussions amongst the utilities with the current spot price and spot market happenings, along with the seasonal move in uranium and uranium equities as well.
Yeah, it definitely does sound like that would be very interesting. So I guess now that we have a picture of what's going on with demand, the other side is supply. And I guess I'm wondering when we might start to see a supply response. And what I've started to hear is, there's a different incentive price for producers to come back online. And it's not the same as for example, a new company that's starting production for the first time. So what are your thoughts there?
Sure. Yeah. Well, I think that we'll see a supply response pretty quickly, but the actual results of that response in terms of greater production being sold into the market, there's obviously a lag time. So the fastest to production are obviously the existing producers and those that are producing via the ISR method. And that would be Kazakhstan and Uzbekistan. Now, Kazakhstan's an interesting one because Kazatomprom, the producer in Kazakhstan, they IPO'd in 2018 and went partially public. I believe they're now 25% public, 75% state owned still. But they've had very responsible market communications and market discipline since they IPO'd. So they've consistently produced at 20% below their subsoil use agreements, which are basically their permitted amount of production, and they're allowed to go 20% above or below that level. And since they IPO'd, they've consistently said, we're not getting the signals from the market. They're not interested in flooding the market and killing the market, because obviously they also benefit from rising prices, right? As being the prominent producer in the world. But they also could be the faster entity into greater production because of their mining method, their established production. However, that would contradict their market messaging. So I'm curious to see how that plays out. Also, there is also a lag time even for them. So even being an ISR producer that currently has all of the infrastructure and the employment and everything, there's major issues with supply chains right now globally with basically everything. So that's going to keep, ramped production from being just turnkey. And additionally, even in a perfect world, if they were to pour resources into vastly increasing their wellfield development currently, they're not going to see an increase of that production until at the very soonest next summer. And the peak of that would be about 18 to 24 months from now is when the peak of those wells that are being drilled now would actually peak out in production. So there's a lag time even from the fastest producers that are currently producing. But we do expect a rising price environment is going to incentivize more production. There's going to be more exploration happening, and new projects obviously take a much longer time to come online. But we do have a significant amount of idled supply, right? So there's McArthur River from Cameco. They're 12 to 24 months to production from restart, and their first year of production is only 4 million pounds. So even if they announce tomorrow, it's likely we could see a price spike due to the financials in the space before a single pound even comes out of McArthur. I mean, we could spike and come back down from that before McArthur even starts producing again. Same thing with Paladin. Paladin has a much less complex mine. In Namibia, it's an open pit mine versus the underground mine in Saskatchewan for Cameco. But they need a handful of contracts in the $55 to $65 range before they bring that back online. It's not just, oh, the spot price is running and we think it's going here, let's start up. It's not how it works. There's huge capital costs. There's huge liability. So those are the big mines that are waiting to come back online. And then all of the new projects, just nothing can respond to this. It takes time. And that's the signal that's being sent, that has been sent to the utilities for years. Is like, guys, okay, you're covered right now, but look, this is about to happen. This is happening a few years out. These projects need that cost of production to even consider coming back, and they haven't. So now we've arrived at this inevitable place where most of the utilities are mostly covered for the short and even into the midterm. However, there's a huge looming supply deficit, and there's nothing in the spot market. So it's almost like it just had to be like this without the utilities voluntarily coming to the table earlier, which they didn't. So c'est la vie.
Yeah, it's so important, I think, to remember that you do need to see the prices at those elevated levels for a little bit of time before you actually make a move. I think that's easy to forget. Looking further into the cycle, during the last uranium bull market, the price went super high for a short period of time, up to about $140 a pound. Can we see a major move like that during this time?
Absolutely. Yeah. I mean, I'm not betting on it, and I never have. It's really the safest bet is to bet on what you know will happen, which is a rise to the cost, to the marginal cost of production. So we're talking, 60 probably. I mean, with the rates of inflation that we're seeing right now, that marginal cost of production is probably more like 70 a pound, which is, as of the spot price today, is another 80% up. But all bets are off with the spot price of uranium, because it's not going to be driven by fundamentals. The spot price will not be, for the most part. It'll be driven by supply and demand, and the buyers being likely to continue to be, at least for the short term, primarily driven by financial interests. So I mean, I have no price prediction. I don't know. I don't know. I mean, people are calling for super bullish players in the space that are also very astute and might not be as conservatively spoken as I am, are saying that, they're making price targets based on the inflation adjusted previous peak. So they're saying, oh, we're going to see 175, $180 uranium during this cycle. I just don't see the point in making that type of prediction, but I also don't doubt it. I mean, it's entirely possible. And I think that however high it spikes, I think that it's going to happen sooner rather than later. I don't see this any longer. At least this current speculation on a fast rising price of uranium, I don't think is going to be long lived and persistent. So it's probably going to do something similar, a big overshoot, a big correction back down to that marginal cost of production. That's what I'm predicting at this point. But as far as how high it goes, nobody knows. I would almost guarantee we're going north of 100 a pound right now. Probably by late 2022, 2023.
Okay, yeah, definitely so hard to make predictions. I definitely wouldn't do it. I guess for investors, the key question right now, so we're in a market that's probably going to be a bit volatile. You mentioned fundamentals aren't necessarily going to be what's driving the price here. How do you approach it if you're an investor? I remember that you like the development stage companies. Is there anything that's changed in your approach to the space in the months since we've last spoken?
No, nothing's really changed in our approach. We still have, the same methodology for picking stocks within the space. We still really like companies that have their own catalysts, that are individually moving their projects forward and maintaining relevancy in the eyes of the market. Those are our favorite stocks, are the companies that you can sort of you can gauge what they're going to do, not only based on their stated plans, but based on inferences from management. And some of those companies have actually progressed since we initially owned them. So for them to continue to keep their promises to shareholders and move projects forward, those are the companies that we really like. But yeah, our process for picking those companies is still the same. We're looking at share structure, we're looking at management, we're looking at free float, we're looking at liquidity, we're looking at the projects and the jurisdictions and the jurisdictional risk and the likelihood of production, all of those things. So yeah.
Okay, a couple more things before we wrap up. So going back to the Sprott Trust, we've talked about it a lot, but it is quite important these days. So they have been quite transparent in what they're doing. You can go to their website. You mentioned you can see what they're doing each day. They're also on Twitter. You can follow them there, and also quite transparent about what they're doing. This is a notoriously opaque market. And I wonder if you think this is marking a change. Are we going to see some more openness in other areas possibly in the future?
That's a great question. I think the more transparency, the better, really. There's still a number of areas of the nuclear fuel market that are quite opaque. the long-term contracts are one of them. I don't know if we'll ever see much more transparency there, because a lot of times they're signing NDAs, and pretty much the contracts do not allow the prices and the deals to be reported. So we kind of have to wait for the vague statements being announced by Cameco every 3 months with their conference calls. But yeah, the transparency from Sprott is huge, and they are being active on Twitter. It's really funny. They're sharing GIFs of like a Pac-Man going along and gobbling up, more pounds of uranium, which is kind of funny to come from them. But yeah, just it's the transparency that they're sharing compared to how UPC was operating the previous vehicles. It's night and day. And I think that the market really, really appreciates that. And yeah, that's a great question. There's certainly a huge difference in this market from the previous market in terms of the speed of communication and social media and the greater amount of funds flowing. It's a very different market. I mean, there's a number of things that look similar in terms of the fundamental setup, but it's a totally, totally different ball game. Information just moves so much faster. So that's really changed things. And that's also another reason why I'm not inclined to, speculate on price targets for the companies or price targets for the price of uranium, because it's like valuations kind of just get thrown out the window in these speculative resource stocks, because a lot of these companies are never going to produce, a single dollar of cash flow. They might end up with 1 or 2 billion market caps in this run. It's not based on fundamental analysis of, like, in the terms of doing a cash flow analysis, a discounted cash flow analysis. It just doesn't make sense. So you can say a company, they're trading as if at a valuation as if they were already producing at the current spot price, and they probably won't even get into production at all in this cycle, and they're already valued at that. But it doesn't matter. It's the flow of funds is what this story is all about this time around, and that's what we pay attention to a lot as well. I mean, for the newsletter, we look very, very closely at the flow of funds in and out of the ETFs, in and out of the spot vehicle, or into the spot vehicle, I should say, because they're not sellers. So those will tell the story, and looking at trading volumes and the long-term trends of all of that, it's really, really kind of points the direction that we're going.
Okay, as we wrap up, last question, if you could tell us where to find you if people want to learn more from you. And is there anything that we're missing in the market right now? All this focus on Sprott, is it overshadowing other points that we might be forgetting that we should pay attention to?
Good question. Well, first of all, yeah, people can find me on Twitter at Uranium Insider. We've been doing this thing where we'll give out a previous month's newsletter as a sample if they send us an email, support@uraniuminsider.com. So we can be reached at both places. What are people missing? I think that the advent of Sprott has been so loud and recognizable and exciting that there's a number of aspects of the fundamental story that are continuing to grow and get stronger and stronger. I mean, there is a full-blown energy crisis in Europe right now. Germany, the country that shut down almost all of their reactors after Fukushima, I think they have 5 or 6 currently still running. They're planning on shutting down by the end of next year. I mean, it's almost getting to a point where it seems like, and I never doubt the stupidity of politicians in any country, but it seems like the only obvious answer is to utilize the fleet of nuclear plants that are sitting idle. I mean, the natural gas prices are soaring through the roof. There's energy crises all over the world right now, and Japan has been a little bit more intelligent about their response. They're getting more aggressive with restarting their plants. One of the candidates for potential new presidency in Japan is very, very pro-nuclear, and is basically saying we need to restart, as many of these as possible, as soon as possible. So there's just really an extremely strong fundamental backdrop for sentiment around nuclear energy and the growth of nuclear energy. NuScale Power, they're making small modular reactors, and there's one set to be built and installed and up and running within 4 years' time in Wyoming. Just signed a deal. What is it called? They signed a deal essentially with Poland that they would be doing something similar, that developing an SMR there to replace an idled or a shut down coal plant. So this sort of thing is happening, and it's happening all over the world. And it's super exciting to see for nuclear, because I do think that it's a great solution in so many ways of, just clean baseload power and carbon emissions and all of that. So don't lose the forest for the trees. Sprott is exciting. It's the shiny object in the room. But underpinning all of this is just a really fantastically growing fundamental setup, not only for the price of uranium, but just nuclear energy in general. So it's a feel good investment because you can actually, feel good about where you're putting your money and how that's affecting the world in a positive way. So that's my final pitch there, I guess.
Yeah, that's great. That's a nice positive note to end on. Not that the whole thing wasn't really quite positive. So thanks for taking the time to explain everything so clearly. Really appreciate all of that.
It's my pleasure.
Again.
Thanks so much for having me on.
For sure. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Justin Huhn.